In this presentation, we will record our month-end expenses in our not-for-profit organization within QuickBooks Pro, QuickBooks Desktop. Here we are in our QuickBooks file. We currently have the open windows open. You can open the open windows by going to the view dropdown and selecting the open windows list. We're now going to open up our trusty trial balance, our favorite report, by going to the reports dropdown up top, accounting and taxes, taking a look at the trial balance report. We're going to adjust the dates up top from 01/01/20 to 12/31/20. Then I'll adjust the font size by going to the Customize Reports, Fonts and Numbers. We're going to change the font size, make it number 11. Okay. Yes, please. And okay. Now let's take a look at our Excel sheet and see what our objective will be. So here is our Excel sheet. We're down here on number 4. We are in essence just going to be recording. We're on number 5 actually. We're going to be recording all of our normal kind of expenses. So we're going to record the expenses that will look basically like debit the expense, credit cash, in essence writing checks. The first one's going to be our salaries expense. This would be wages. Now, we're not going to get into recording salaries in QuickBooks. You can. We have a whole course on that if you would like to. We got a lot of more detail. That's a whole, course in and of itself. However, we want to record just the basic transaction to see that that will be, of course, one of our major expenses if we do have employees within the organization. Therefore, without payroll taxes or anything else, we're breaking it down to the most basic kind of salaries expense we would have if it weren't for all the regulations and whatnot, which would be just like any other type of expense, which would be debiting the salaries expense and crediting cash. So again, if you want more detail on salaries expense, it's pretty much the same for not-for-profit, for-profit in the functionality within QuickBooks, and we do have a course on it, and we highly recommend it. So let's post this out. We're going to say the salaries would be increasing. Straightforward transaction for on the debit side. Now, we might have multiple employees. You can think of multiple types of transactions. We're basically recording a whole year or months or years worth of transaction in one kind of setup. So this is the kind of transaction you would have or could have for multiple employees. The other side then going to cash. So cash up top. So we're going to go to cash, and we're going to say that that's going to be equal to, I'm not in cash, I'm up top here. That's going to be equal to, and that would be going down by the 48,200 in our case. So there's our transaction. So we are in essence just going to be writing a check within QuickBooks. Now note, all we're going to be doing is recording it to one category now. Then we will be breaking this out into our various categories using classes at a later time in accordance with percentages. We'd have to come up with the percentages. In our case, 30, 30, 25, 15. So as of now, we're going to put it all into one class, that class being the fundraising. So I'm going to go then to QuickBooks, and I'm going to go to the Home tab. We're going to then just write checks. We're going to write checks. Your default account should be not the clearing account, but the actual checking account. So be careful with that. Make sure you have the actual checking account here on the default account. You could even make the default account inactive at the points in time when you're not needing it for a particular transaction if it starts to get confusing as to which account to be using. So then we're going to put this up to the 14th. We're going to call this, I'm just going to call it employee. And I'll call it employee 1. Again, a lot of ones in here. I'm going to quickly add it. I'm not going to set it up as an employee because, again, we're not going to be running payroll. I'm going to set it up as a vendor. And then we're going to give the amount, which is going to be 48,200. So the amount of 48,200, 48,200. Then the expense account is going to be, what did we call it here? Let's call it the same name, salaries expense. I'll copy it. Salaries expense. We're going to have to add that. Salaries expense. We are in the expenses tab, not the other side. I'm going to add that, setting it up. That's going to be an expense type of account. That looks good. We will then continue, and then that looks good. So save that, salaries expense, and notice that we set that up. I set that up as the salaries as supplies. So on your screen, you have supplies now. It should be salaries. You can change that if you so choose at this time. We're going to show you how to change that after we check it out in the trial balance later in this presentation. We're going to put the class is going to be fundraising. Fundraising. There we have it. Now I'm going to say save and new. And what's this going to do? It's going to decrease the checking account. It's going to increase the expenses. So save and new. And we could check this first one out, and then I'll just keep recording the others because it should be a similar transaction all the way through. We got the checking account up top, and then down below we added the new account, which is the salaries expense. And of course, notice what I did. I picked up the supplies expense. So I'm going to fix that now. So let's go up top. We're going to go to the lists. We're going to go to the chart of accounts and the salaries expense. I'm going to adjust it now. Right click on it, edit that account. And then I'm going to put it to supplies. I'm going to call it supply or salaries expense. Hopefully I spelled it right. And then say okay and close that out. Back to the Excel sheet. The next one we have is the utilities expense. Utilities expense. So within the utilities expense, we're going to be doing the same kind of thing. The expense is going to go up, cash is going to go down. We're going to write a check. So if we go back up top, utilities, then what's going to happen is it's going to be increasing with a debit, and then cash is going to be going down. So if we go back up to cash, similar type of situation, expense going up, cash going down. We're in this item. I'm going to say F2 plus F2, and we're going to go down to that credit. So similar type of thing happening with the accounts here. We're going to, only thing different in QuickBooks is we're going to be using a check to do the journal entry, and the other thing is we're going to be setting it up to a class, that class being fundraising, which we will later change in accordance with the percentages that we looked at prior to this. Let's go back in. We're going to say tab. This is I'm going to say Edison is our utility company. So I'm going to set them up as a vendor, as our utility company. We're going to put the amount of $3,200 in the amount because that's how much we paid. $3,200 in the amount. We're going to set up the account of, I believe we just called it utilities, right? Now you could call it electric or something like that, but utilities is really generally where we put the utilities is where we put usually the gas and electric, but if those are substantial in your organization, you may want to break them out to gas and electric. And then I would typically break out the phone. Most people break out the phone now. And so I'm going to say save. And then we'll put that into the class of the fundraising. Fundraising again, which we will reallocate at a future time. Then we're going to say save and new. I won't check it out because it'll look much the same as the last one. We'll check it out at the end after we enter, all the other checks that we're going to write here. We're going to be doing a lot of bill doing. We're going to get these bills off of our desk at this time. So then we've got the printing and postage expense. Same kind of concept, debiting the expense, crediting cash. It's going to look something like this. We're going to go to the printing and postage. Note that we're recording that account to the wrong account here, which is the provision. It should go to printing and postage. We're going to leave it for now, and I'm going to come back in at a later point, and we'll show you how to basically make that adjustment. There's the debit. We're going to go up to the cash. There's the cash is way up here. It's a lot of accounts. And then we're going to go into cash, F2 plus F2. Scroll back down and pick up the credit. And so there we have that. Same kind of concept. Cash is going down and the expense is going up, bringing net income down. This is still revenue. Income is higher than the expenses, but it'll probably flip pretty soon here. Let's record that one into QuickBooks. And I'm going to go back through this again. Let's say this is the post office. Notice I said month-end transaction, so I'm in the middle of the month, but this might be happening at the end. The date should have been the 31st or something, but so bear with me on that. We're going to say quick add vendor, and the amount is going to be for 1530. So we'll say that's the amount, 1530. And then we're going to say that the account is postage, printing and postage. Let's copy that and put that in here as the expense account. Tab, set it up, expense account type. And there we have it. Expense account looks good. We're going to save and close and then set the class for the fund raising. And then we're going to save and new again. And we're going to say yes. And then let's check a look at the Excel, and that's it. But no, it's not, because we have some hidden cells up top. So let's unhide some cells up top. We're going to put our cursor on I and then highlight to P. Left clicking on I, selecting over to P, and then letting go. Right clicking the selected area, unhide. And so now we have a couple more we want to put in place here. Then I'm going to hide the ones we don't need now. So I'm going to put my cursor on E, left click, highlight over to I, let go, right click the selected area, hide. Now you don't really have to do this. You don't need to even fill out the Excel sheet if you don't want to, but the point is we want to see it in a more transparent format and then put it into Excel. Now we're going to have another expense, which we're just going to call miscellaneous. So we'll say we're writing a check to miscellaneous expense. So that's the one that we didn't want to categorize somewhere for some reason. So we're going to put it in the miscellaneous. Maybe it's too small that we don't want to categorize it, possibly. And so we're going to go back up top. That's going to be the 760. And the other side, and obviously you don't want a whole lot going into miscellaneous expense because it's, you want it to be categorized. But if there are really small items, then it might not be worth having a whole lot of different accounts for them. But the same transaction will be much the same. So we're going to say that. I'm going to go back to the checking, and then miscellaneous. I'll set up the vendor, miscellaneous vendor, unknown vendor, unknown account. So we'll say it's the miscellaneous vendor, and that's going to be the 760. And then we're going to set up the account, which is going to be miscellaneous expense. So I'll just put miscellaneous expense and set that up. It's going to be an expense type of account. We're going to say continue. Looks good. 760, class, fundraising. Then we're going to say save and new again and see if we have any more that we can do this for, because this is good times. Going to make that one's green because we did it. And then this one, we've got the printing and the postage. Now we're going to record this one, but note we're not crediting cash here. It's going to a payable. So this one we're going to use a bill, but we'll record it here with a debit and credit. So we're going to have the same expense going up, but rather than cash going down, a liability, a payable going up. We're going to pay it in the future. So we're going to go to printing and postage again. Printing and postage, printing and postage. Where did I see that? That one was down here. Printing and postage. And note as I go to printing and postage, I'm noting that I put this one to the wrong account, which is provision for uncollectible pledges, which should be going to printing and postage. So the way I'm going to adjust that is I'm going to take this whole thing, I'm going to double click on it, and I want to take the reference equals H39. I'm going to cut it, right click and cut it, and then I'm going to put it into the printing and postage expense, pasting it there. And then I'm going to add the new one, double clicking on it, going to the end of it, plus scrolling back up, and I'm going to pick up the printing and postage expense, and then the other side going to the payable. So we're in accounts payable, increasing on the credit side. So there we have that. So now let's put this into QuickBooks. If we go back to QuickBooks, then I'm not going to write another check, but enter a bill. So I'm going to close the check. Rather than entering a check, I'm going to go back to the home page. We will be using a bill. So I'm going to go into the bill. And then I'm going to say this one, I'm going to say Office Depot. So we'll use Office Depot. We're going to quick add Office Depot. We're going to put the amount. I'm going to close this back up. We're going to put the amount then of the 157. So we're going to put amount 157. And we'll scroll through here. And then this is going to be the printing and postage once again. Printing and postage. And we're going to put this to the class of fundraising. All right, so now we're going to say save and close. And what will this do? Instead of the checking account going up, it's going to be increasing the payable. So the payable is going to go up, and the other side is going to be going to the expense of printing and postage, and going to the class of the class that we set it to, which is fundraising. Okay, so then we're going to go to the trial balance. Let's check it out, see what happened. So if we scroll back up, we have the checking account, which is going to be going down by all these transactions, these checks that we have written. If we double click on it, then scroll down through it, we'll see that we have the checks that we have written down here, and the split column will show the other side. So we'll see type as check, the split then showing the other side of the transaction, in this case utilities, and the salaries expense, the printing and postage, and the miscellaneous. Closing this back out, then we also see the payable is going to be increasing. Here's the payable. Double clicking it, we see that the payable amount closing it back out. It, of course, is a typed bill rather than a check. We can also see the detail of who we owe on the payables if we have more than one person by going to the reports drop down up top. We go to the vendors and payables, and we go to the vendor balance detail or summary, and that'll tell us who we owe. In this case, the Office Depot vendor here, and the other vendor that we have set up, and that was the beginning balance vendor. So I'm going to close this back out, and then we scroll down, and we have all of the expenses: miscellaneous, printing, rent, salaries, utilities, and so on and so forth. So the other way we can see this is if we go to our profit or the other report we want to consider, profit and loss by class. Going back up to the reports drop down, company and financial, let's take a look at the profit and loss by class. Changing the dates up top from 01/01/20 to 12/31/20. So there is our information. This is by job. So I'm going to close this back out. Let's try that again. Reports. We're going to go to the company and financial. We want the profit and loss by class. Dates up top, 01/01/20 to 12/31/20. So there we have it. Now in the expense category, we've put all these expenses in under the fundraising. We're going to have to break them out later into the other categories. I'm going to put them first into fundraising. That'll make the transactions easier to do, and they'll all be in the same spot. Then I can go back in there, as we will do in the future, break them out in accordance with our percentages here. The other way you can think about it is you could not put it into fundraising and just put it in undeposited funds, and then have it uncategorized, I should say. If you do not have it categorized, another column will pop up called uncategorized. And that's another way that you can just remind yourself, hey, these things need to be applied somewhere, and go back in there. I like to reserve the uncategorized fund, if I can, to pop up as a warning that you haven't assigned any class. And therefore, I'd rather put these into fundraising and then go back in there later if I need to and break them out, as we'll do in a future presentation.